examples you've given are absolutely correct. And because होटल भी 11 रुपए में इशू हुआ था, मुझे 10 में था, TVS Motors 10 रुपए में, all those.
Yeah.
Because all those controls and all. Now it's gone haywire. I agree. But and it's very difficult for an ordinary investor to spot the genuine. For example, Godrej Properties. Decent. Came out at 500 or 480 or I don't know. What's 700 or something. But I think these are hardly one in.
Very few, because see, I'll tell you that way TCS. No, when TCS had come to the market, they think a house of Tatas, they had left money on the table for the investors. It was fairly priced. See, we have very few managements who do that. Similarly, Infosys, when it came with the public issue, it received a very lukewarm response, because genuinely they came to raise resources for what it is. What my idea is today, because of the greed of the this thing management, they only see a good time and try to dump the stocks. And see, IPO, the system behind an IPO is very good, because it is funding the innovators, the promoters who are willing to take the risk. But the problem is, with this market sentiment, there are a lot of people exploiting it. Per se, it is the right thing. How does the market is the best known person to allocate resources to different people, and that's what this IPO system does. But I am just trying to show you that how it is being exploited.
You are talking of private companies or whatever. What about the PSUs? Do we view the PSUs with the same vision as we view private companies?
Yes, means I'll tell you, it depends upon
individuals who are making money.
It depends upon how the government looks at it this way. The government also, they would also be thinking how much price. That's why in bear markets they don't come out with IPOs.
Government also goes.
Those are.
But by and large, many of the PSUs have given investors good returns.
No, see, it depends. It depends when you bought. It depends. Now
PSU banks.
Those same returns 2 years back were not there. Now the market is up. That's why you feel that they have given returns.
Many of them.
No, many of them have given. But then that means there was money kept on the table.
Maruti and banks.
No, that means there was money kept on the table. If it has been done in that way, it's fine.
So how do you evaluate whether an issue, suppose we are talking about the Coal India issue coming up now, how would you evaluate?
I would say that today in a frenzy market, definitely when issues are coming, they think they'll have to be priced according to what the market is willing to pay. So I will not evaluate. I will not buy anything when the markets are in a frenzy. That's what I would do, because even I will not be able to judge whether the valuation is right or wrong. Who knows?
Why who knows? Valuation you can always find. You can always find the valuation is right or not.
Correct. No. Valuation is. I'm not talking of the intrinsic value. From the market point of view.
Say for example, Coal India.
Yes.
So you can always assess the valuation. Evaluate it.
Yeah. Correct. So now I would say one thing, that if the market is when there is a frenzy for people trying to rush to buy that stock, then an IPO would have the first 9 months to 12 months as the hot period. Then the fancy dies, and when that fancy dies, that's where the value emerges. Means I'm not saying that all IPOs are bad, but you're going to get very few IPOs where you'll be really able to make money. Yeah.
You talked about the IPO, and but isn't there SEBI is a regulatory body, so they are supposed to vet the prospectus. Now, in my personal opinion, and it's only a personal opinion, I think there's really nobody in SEBI when it comes to certain very difficult or different sectors in which an IPO is coming out. They don't have the wherewithal or the experience. I don't wish to take the name of a company which came out with an IPO, as you said, some years ago. I was in the trade, so I looked at the prospectus. I studied, I did the analysis on what they were projecting, future growth, PE, volumes, etc., etc. On studying it, I knew it was the biggest bullshit they were giving in the prospectus. What I'm trying to ask you is, how do these buggers get away? how is it people like you who are fair weather people who want to help investors don't take issues up with these guys? These guys get away. The thing listed, it listed, 400, it came on at 800, it went in the grey market at 1,000, 1,100, and even today it's doing very well. The point is that if SEBI now were to open that prospectus and call that promoter and say, look here, you said that this is what your volume growths are and this is what your revenues are. You haven't achieved it. I'm going to penalize you. There is no penalty on all this nonsense that they put out, and they get away. And even today, in this high market, the stock is really trading high as I observe it. But I know that none of the commitments that they made in the prospectus, and some of them were blatantly wrong, they get away. So my question to you is, a common man on the street, the poor guy who's chasing a dream, who wants to make money, is going to write with all these advertisements in the press and all. And SEBI, who's supposed to be monitoring, doesn't do it. Nor do intelligent people like you take the issue up with SEBI to say this should not be allowed. SEBI doesn't have experts on aviation, on shipping, or ports, or whatever. They don't have experts. They do not understand what that guy is saying. They get away.
See, that is the reason in the financial markets there are a lot of judgments to be made, and the regulator or even the credit rating agency, they are not equipped to make judgments. And why people get away? Because they blame the market, market aaj upar tha, market niche hai, that's why things are changing. That is one of the parts. Secondly, as a regulator, the job is to regulate the market, to blow the whistle. But in this country, when you have courts of law, but no courts of justice, we are going to. So the best part is let us become wiser rather than trying to change the system. If we are wiser, if we know that certain thing, like I told her, IPOs, I know that I will not go near it. This thing.
No, you're saying okay. Let us get wiser. I agree with what you're saying. We are reasonably educated, intelligent. It's our field. We understand it. I feel for the common man, the common Indian on the street, who's getting sucked in by these people and is just left off.
No, but the personal finance business. Yep.
Sorry to interrupt. I just want to correct a misconception here. For past 4-5 years, SEBI has done away with projections. So today in a prospectus you can't make any volume projection, profitability projection. So that was one big contentious issue where promoters would say all sorts of things in the prospectus, and this used to be in late 90s, etc. But today, company can only give factual information of the past. They are not allowed to give any projections.
Can I say
Yes.
something here?
Yeah.
When you're talking about overvalued issues, IPOs, why not just see the PE of the issue? I mean, if it's an existing company, profit-making company, on the basis of PE, you can decide whether it's overvalued or not, and you don't take it.
Yeah, correct.
I mean, Sapna talked about PSU, but there was this NHPC issue, government issue, which was very highly priced. It was priced at 35 PE, and it wasn't a success. So I think the same valuation should be done. See what the PE is. If it's high, don't buy it. Would you agree to?
Yes, definitely. Yeah. Any more questions? Anyway, I'll ask Rajiv, why don't you take your session? Thanks. Thank you.
Good evening. Today, there's no individual stock to be discussed, and I don't think we'll be discussing individual stock ideas for some time to come. It's becoming increasingly difficult now to identify bargains at these prices. Today's presentation is more about raising questions. It's not about answering them. And it may seem very strange today to talk about investing in a globalized world, when everyone across the globe is looking at India sitting in India where I have opportunity of buying into Indian companies, I am going to look about talking beyond our shores. So it's a contradiction in terms where we have been very strong India bulls for last 6-7 years, not continuously but most of the time, not in times of bubbles, but otherwise we have been pretty supportive of Indian companies and investing in those. However, what is happening is there are some things which are becoming, as I'll call them, gospel truths. People are saying India can do no wrong. So I'm just trying to raise some questions over there. So, yeah, I'll just start over here. So I'll set up the ground for our discussion today. There's a very faint orange line going. I don't know how many people can see it. There's a faint orange line which is somewhere around 600 in this chart. Is it visible behind?
No, but that is for the video. It cannot be shown.
Okay, I'll just highlight this. There's a graph which goes here. This is the graph. You can trace my finger. It goes right up here. It comes down here. And again, it's going up to 600. This orange line is our Indian stock market, is BSE Sensex. Or forget the line. Most people would remember that Sensex was below 3000 in 2003. This chart is on end August. Today, when index is close to 21,000, we have grown 7 times in 7 years. That's been the pace of growth of Indian equity markets. Compare that with the very prominent white line which is going, which is Dow Jones Industrial Average, the US market. It's close to where it was. It's at a value of somewhere around 125. Last 10 years, US market has not gone anywhere. It started at 10,000, it's somewhere around 10,000. Last 20 years, bonds have done better than stocks for US markets. Last 30 years, stocks just about beat bonds. It's not been a great period for US as a investment destination. Japan has not done anything for last 20-25 years. So in that sense, the performance here has been really exceptional. 7 times in 7 years is no small growth. Again, actually there are 2 lines. Orange one again is quite faint. The white one is Sensex, BSE Sensex. The orange one is the valuation. You have peaks over here in terms of valuation. These are 50 PE. This is 92, Harshad Mehta boom. This is somewhere about 30 PE. This is in the dot-com boom. 2007 again 30 PE, real estate infrastructure. Today we are somewhere around 22 times, 23 times. So that is the kind of valuation we are at today. If we look at the past, we have seen excesses, and today we are nowhere near the 100 times earnings kind of thing in dot-com boom, where all sorts of companies were quoting at ridiculous levels. It's not that way very clearly a bubble. It's clearly not. It's somewhere above the average levels. It's closer to fuller valuation than to undervaluation. That is very clear.